Well, ladies and gentlemen, I have a very special announcement. So today is that special announcement. Peter Tuchman will be the opening speaker for this FX Summit 2024 conference, the most anticipated conference in the world for traders. Peter, are you excited to come out to Dubai?
You know, look, I am so excited. I'm honored to be there and be your speaker, man.
I'm here with Peter Tuchman, over 30 years of experience here on the New York Stock Exchange.
38 years of experience.
I stand corrected.
There you go.
Thank you for your time. I know you're
I got here in 1885. I've been here for 137 years. Let's go.
For the folks who are wondering, what do you do here at the New York Stock Exchange?
Okay, it's a good question. Look, as I said, I've been here for almost 40 years. I got here in 1985. When I got here, we had no technology, obviously. There was no internet. There was no computers, right? Now, I'm not that old, but, you know, computers in the big picture are actually quite a recent an invention, to be perfectly honest. So in 1985, when I got here, we did open outcry auction markets, screaming and yelling, just so like you saw it in the movies. Everything was done on paper. Order flow would come from upstairs. You know, they would decide, they would write an order, they would phone it down to a booth. We're here in the balcony of the stock exchange. On the outside of the room are booths, stalls, basically, where we used to stand there with 100 telephones, get orders, come down, you'd write an order, you'd beep your broker, he'd come running in, you give him the order, he'd run out to the crowd, he would scream and yell. It was an open outcry situation. There'd be buyers over there, sellers over there, and you would trade. Okay, and that's how it actually happened. When you know, let's say I had 100,000 shares of IBM to buy, I bought 10,000 shares, I would and I would buy it from another broker. It was literally the beginning of the blockchain because every one of these trades had to be ledgered, right? So who bought it, who sold it, how many shares, what was the price, what time did it trade? And there would be a guy called a reporter, and he would write all that down on a computer card. And so while I was reporting it to the clerk, who reported it to the broker upstairs, he was inputting it into this computer card, putting in a machine that went upstairs. It was being input into a teletype machine, which created the ticker tape. And that was how we traded. Now we use algorithms, right? You can be 10%, 20%. Back then, it was a lot more hands-on human interaction. So that's how we used to do it. Obviously, things over the years have changed. And now, look, technology has taken over this business like it's taken over every business. We are in the only human element marketplace still in the world. There were many of them, the Pacific Exchange, Amsterdam, the UK, and whatnot. Right now, the New York Stock Exchange, where we are now, is literally the only place where actual human brokers are trading the marketplace. So what do? I actually represent a hedge fund. Okay, I built about 15 years ago, I built a trading program around the S&P 500. It's a lot more complicated than I can describe now, but basically I built this strategy around trading the imbalances for the opening and the close. So I come into work in the morning, I get an overview of what's going on in the market. I'll read a lot of newsletters, I'll find out what's going on with earnings, economic data, and whatnot. I'll prepare myself for what's happening in the market. I will also track where the market's been trading 24 hours a day, because now markets trade 24 hours a day. I'll see where the S&P's trading, I'll see where crypto's trading. I'll get a sense of what's happening overall, check out how many wars we're in, what banking crisis started today, whatever. I'll come into work and I'll trade the opening bell. So I'll watch where the futures are trading, and the S&P 500 is trading away, right? Because it trades 24 hours a day. I will then see what the order flow looks like for the opening bell in New York, and I will trade the dislocation, right? It's sort of complicated to describe. I will trade what are discrepancies between where it's trading away and where it's going to open in New York. Yes. That's my opening trade. After that, we'll be talking to customers. We'll be preparing ourselves for the afternoon trade. Now, it's not the way I've always traded. In the old days, before a lot of this technology, I traded equities all day long. I had a lot of institutional flow and stuff like that. Now things have changed. A lot of big institutional people will use algorithms. They'll trade directly from upstairs. But so for my afternoon, the order flow that comes in for the closing bell, I will negotiate that, and I will trade the SPY, the spiders, and I will trade the individual names. There are 347 S&P 500 stocks that we trade here. The other 5,300 of them, 153 of them trade on NASDAQ, right? We don't trade a lot of the Googles and Apple and stuff. That's not done on the NYSE. And so that's my day.
So mostly on the NYSE, you guys are trading industrials, you guys are trading cyclicals, you guys are trading financial companies?
We are trading
tech, or
look,
we trade S&P 500 companies.
No, we trade virtually everything. There are plenty tech names that we trade here. We trade obviously all names in the S&P 500. We trade all the Dow stocks. We literally trade probably 3,500, 4,000 names here. Oof. So it has nothing to do with just SPYs or Dow or anything. We trade virtually everything except what's traded on NASDAQ. Okay. Right. So look, the reason tech is sort of migrated over to NASDAQ, it happened a number of years ago, and that's kind of where they went. But you know what? We are a much better exchange. Yes. We are the only exchange that has market makers, right? That's why you'll often see the volatility you see in tech, trading tech, because it's trading on NASDAQ. There are no market makers. It's basically cowboys and Indians, dogs and cats living together. Crazy stuff. So it's a different marketplace, but we trade literally everything here.
The question that is on everybody's mind, and I know this is very important, where's SPY going next year? No,
if you ask me where the market is going, is it going up or down? The answer is yes.
Okay, perfect. Can you explain the role of a market maker to folks? Because from a retail trader perspective, the market maker is this kind of illusion. It's this kind of like mythical thing.
You think he's a bad guy.
It's the Wizard of Oz behind the curtain.
Yeah, 100%.
So can you explain what a market maker really does?
100%. So look, take your camera and look down there for a minute, because these circular posts are where the market makers are, right? You probably can't see them from here, but you've got brokers on the outside of the room, and then these things that are circular like figure eights, those are market makers. Come on back here. So look, it's kind of bizarre. My partner, David Green, in Wall Street Global Trading Academy, used to be a market maker. He started on the floor as a squad. He moved his way up and became a clerk and then a market maker. And he was a market maker for many years before he got a buyout in one of the biggest buyouts on Wall Street, which was when Goldman Sachs and Spear Lees ended up doing a merger for $4 billion. Probably the worst deal ever in history of Wall Street, because it ended up getting sold for $280 million a bunch of years later.
Ouch.
That being said, David was a market maker. Now, for some reason, the retail trading community, and more now the newer retail community than in the old days, market makers have this identity that they're bad guys, they're thieves, they're trying to screw you. They see your stop orders and they're trying to F you over, and they're trying to F you over. Trust me, I talk to retail traders all day. I know. And the bottom line is, if I can say it now and squelch all the BS, they are not that person. They don't do that. Trust me, they're trading billions of dollars a day. Your retail order, no disrespect to your retail order, whether it's 1 share, 10 shares, 100 shares, 1,000 shares, 50,000 shares. They are way too friggin' busy trying to protect their P&L, profit and loss, and trade the stocks for their company than to be worried about your stop order on 1,000 shares. It's just the way it is, right? So don't ever think that's the case. That's not who they are. They're not bad guys. They are there to inject liquidity into the market. So in fact, they're really good guys, because if you go to NASDAQ, you're going to see a stock go from 10 to 30 back to 14 all over the place, because there's nobody there flying the plane. The market maker is the pilot on a plane. Would you like to get on a plane, take off from New York on your way to Dubai, and everything's fine and cool? Suddenly you hit turbulence, you go to the cockpit and there's nobody flying the plane, and you go, holy shit, what's going on here? What are we going to do? And you start going down towards the sea and you look like you're going to crash. That's what it's like trading on NASDAQ. You're trading in a marketplace. You're flying in a plane where there's no pilot. A market maker is the pilot. He's there to create a smooth and active market. He's there to inject liquidity into the market. In the absence of a buyer, he has to buy it. In the absence of a seller, he has to sell it. He doesn't give a about your stop order. He doesn't even see your stop order. Now, in the old days, he did see the stop order, because it was a different kind of business when we traded on paper, right? And stocks were going down or going up, and there was a big collection of stop orders in a stock. We traded eighths and quarters. We had a different whole nature of the business. Then he got involved when there was a stop that went off, because stocks tended to trade really volatilely back in the day. But he doesn't see it. He doesn't do it. That's not who he is. So once and for all, stop it. Look. Retail traders who are unsuccessful love to blame somebody for their losses, right? You don't hear bitching and crying from people making money that they don't like market makers. You hear the fetches of all the people who don't know how to trade, who are averaging into bad trades, who are not using stop orders, complaining and blaming the market maker because he screwed them over. That's not the case. Start making money, learn the game, get the playbook. Come, I'll teach you how to trade. Because if you were doing it right and you were successful at trading, you wouldn't look for somebody to blame your mistakes on and your losses on, and you wouldn't have this stick in your butt, sorry about my language, about the market maker trying to screw you.
Everyone thinks so. An institutional trader, they're running the market. They have all this extra information that we don't have. Can you clear up some of those misconceptions?
Sure. So look, an institutional trader either represents high wealth people, they represent large mutual funds, they represent, large brokerage firms have assets under management. So an institutional trader, look, banks and corporations and retirement funds and whatnot have their money placed in different large brokerage firms. That's institutional traders, right? So an institutional trader is somebody who's trading a big book, right? A retail trader, and their order flow tends to be 10,000, 50,000, 100,000 million share orders. A retail trader, and no disrespect, I love retail traders. I'm embracing all the 40 million new retail traders who came into the marketplace. I love that you're all here. You never got invited to this party, right? I'm thrilled that you're all here, but you need to learn the rules and you need to understand that there are limitations. If you're trading size is 1 share, 10 shares, 1,000 shares, 500 shares. It's just different. Your role in the marketplace is different. And look, hopefully if you do it correctly and you grow your book, one day you will be a bigger trader, trading more size. But an institutional trader, first of all, doesn't control the market. Now look, if I'm 7'2" and I'm trading basketball, I will have an advantage over me trading ball. Right? I know I used to be 7 foot tall. I'm not 7 feet tall anymore. But look,
that's what the exchange will do to you.
Exactly. There are different advantages in life in general. Okay. Short people don't play basketball. People with retail orders are at a bit of a disadvantage just by nature of the fact that they can't move markets and that a lot of it is psychological, that they think they're less than, but they're not. They basically have the same access to the markets that anybody has. Do they have less access to information? Yeah, for sure. Retail traders don't have 25 grand to pay for Bloomberg. They don't have $25,000 to pay for access to newsletters and to institutional analysts. It's just by nature, right? If you make, $50 a week, you're eating at Mickey D's. If you make $1 million a year, you're going to Delmonico's for steak. It's the nature of life as far as that goes. There's certain advantages by having more wealth or having more money or whatnot, but don't ever think that you are less than being a retail trader than an institutional trader. You are trading with limited information by nature because of the cost of the information. It's not like these guys are sitting around trying to hold you back. Look, I will be the first one to admit historically, we just talked about it a minute ago, for 100 years, there were barriers to entry for a regular person to get into the stock market. An accredited investor was somebody, the only people who could trade the market, and that was somebody who, if they invested in the stock market, if they lost 100% of that money, it would have no effect on their standard of living for 5 years. Well, anybody but a rich person could say that, right? I mean, 5 years, yes. Long time, losing all your money, right? It's not a scenario you want, but that's the bottom line. What happened amazingly enough during COVID was that suddenly you've had, and this is not an endorsement of any of them, but you suddenly had these trading platforms. A lot of the rules got relaxed a little bit, and everybody with an iPhone and $100 can trade the market. Robinhood, Webull, TD Ameritrade, all these small retail firms came out and gave access to the market by people who didn't have much money. You can buy a fractional share, that's brand new. You can buy an odd lot, that's 10 shares, that's new, right? So if anything, the nature of the business has opened up to make it more accessible for a retail trader. So you guys should be thrilled that we are where we are now, because 5 years ago, you would have no access to this market. You'd be trading blind if you were even given the chance to trade, right? So, at the end of the day, there are realities in life, in relationships, in everything, right? If you're somebody who doesn't have much money, you can still have an account at a bank, but you have a limited savings account and a checking account. If you're a person who's got $1 million in that bank, well, you've got your own, you've got your own person who you can go see at the bank. I mean, it's kind of that VIP curated type of relationship. But what was your question?
Well, so the last question, I guess.
What was the last question?
The last question was about the differences between institutional and
okay,
retail
fine.
traders.
Right. So, and you've also right now in the market, which is a new thing. So as of March 23rd, 2020, there was a complete democratization of the trading community. Everybody with an iPhone and $10 can trade the market. Okay, suddenly you had 40 million new people in the marketplace. It coincided with COVID. It coincided with the meme phenomenon. It coincided with like dogs and cats living together, crazy shit happening, and the market went on a crazy tear. And a lot of people, sort of the crusty old codgety people on Wall Street weren't thrilled that all these sort of cowboys and Indians came running into the market, and messed with the meme stocks and all that kind of stuff.
I didn't mean to cut you off here, but people assume that because of all the new flow that was coming in, that traditional investors and traders and market makers were happy because it was new liquidity coming in. Is that not the case?
Well, no, I believe it. I believe it's a good thing. Not everybody did. I mean, if you look at the internet blew up. That who are these gangsters trying to buy up stocks and all this meme phenomenon stuff, and those people don't deserve to be here and all that kind of crap. Everybody deserves to be here as long as you play by the rules, right? Look, the Wolf of Wall Street doesn't play by the rules. He shouldn't have access to a stock market, right? He's just a bad freaking guy. So there's retail traders, and all power to retail traders. You're new, come in here. All I can say to a retail trader is learn the game. Come and join us at Wall Street Global Trading Academy. I'll give you the playbook. I'll teach you how to trade. The analogy I love to use is if you want to go fly a plane, you don't go to Teterboro Airport, grab a set of keys from in the office, hop in the plane and hope that it works out. Right? You're going to spend, 200 hours reading books. You're going to spend 200 hours with a co-pilot before you ever get in a plane to fly. Same thing with trading. Suddenly on March 23rd, they opened the doors. They gave everybody access to trade the market, but they never taught them the rules of the game. So suddenly, as long as the market was going up like it did during COVID, everybody was happy. It's a beautiful thing. They bought GameStop at 2. It went to 483. No one told them that it could go from 483 back to 2. Right? So 80% of the people who got into the market for a minute thought this is like get rich quick scheme. They thought the market never goes down. It's going to the moon. You heard that crap. Everything. It's going to the moon. I used to have arguments here on Instagram with guys telling me I'm an old suit. You don't know what you're talking about. AMC's going to 400. You're just full of shit. La, la, la. The bottom line is you need to get the playbook as a retail person to learn how to trade this market. Markets go up, markets go down. They're very volatile. They do give you tools to protect yourself against downside risk in a market. That's why everybody, especially retail people, have to have a stop order on every order they have. Net, bottom line, it's not a negotiable thing. Every order you enter, long or short, must have a stop order. The stop order should be 1%, not of your portfolio, but the price of the stock. Think about it. Am I willing to risk $50 to make $200? I'll do that all day long. But I'm not willing to risk 200 to make 50, because if I have one losing trade, I need 4 winners to get back to even, right? That's the whole thing. This is a probability game. Right, so there are rules, and I'm happy to teach them to you. There are 5 strict rules of successful trading. The mistakes that most retail traders make who are unsuccessful are all the same. They don't use stop orders. They average into trades. They turn winning trades into losing trades. They turn winning days into losing days. When they're losing money, they don't know when to turn the machine off. They revenge trade. These are the mistakes that retail traders make because nobody taught them the rules. That's the bottom line. So that's retail. Right? It's a new game. Learn the rules. Call me. I'll help you out. Institutional traders are a whole nother story, right? They're even bigger than big. They made a lot of money. They basically are a big part of this market because people who are struggling economically are not trading the stock market. They're wondering about when they're going to get their next meal for their family. So the market is being traded by people with a lot of money. Those are the big institutional traders, the big hedge fund traders. And so those are the people in the market. But, it's in a wonderful place. Just don't, learn the rules. Don't bitch and holler about shit that you have no control over, right? And don't think that the market maker's a bad guy, because he's not.
Wow. Okay, so I want to ask you two more questions. We'll do one at a time.
No
you
problem.
mentioned 5 rules that retail traders should know. And then I was wondering if I could give you a few of the rules that I follow and it would get you to critique them.
Okay, good. Yeah, go for it.
So what would you say the 5 rules of day trading are?
Successful day trading.
So with your over 30 years of experience on the New York Stock Exchange, what would be the top tips that you could give for successful day trading?
Okay, so first of all, as a broker on the floor of the stock exchange, what I do for my business, which is trading the S&P 500, even though it is considered day trading, it's not what I teach retail people about day trading. It's a different thing. So let's separate that. So it's not from 30 years experience, because for most of my career, I didn't day trade. I was representing house brokerage firms, Cowan and Company, convertible arbitrage, other stuff. Wow. So what I've learned over the last number of years about day trading, about technical analysis and risk management, is what I need to convey to you guys, because that's where you're going to see value. So at the end of the day, the rules are simple, and they're just like this. Have a plan on how much money you want to make in a day. Mm-hmm. And when you reach your goal, turn the machine off and go home. The only thing that you can't get back is time. Right? Time is the most valuable commodity in the world, right? So think about that. If I'm a 100-share trader, I should be making $100 a day. If I'm a 1,000-share trader, I should make $1,000 a day. That's my goal. When I hit my goal, I turn the machine off, go home, go hang out with the kids, go to the beach, drink a Coca Loco, whatever the F you want to do, okay? Secondly, have a stop order on every trade you do, and never change your stop order midstream. If I buy 100 shares at $50, I put in a stop order at 49.5. You have a target amount of money. When you hit it, turn the machine off. Every order you enter, you have a stop order. What does that mean? I buy 100 shares at 50. I put in a stop order at 49.5, down 1% of the stock. Okay? If the stock goes to 50.5, first of all, if the stock goes to 49.5, I get stopped out. I never change my stop order. I'm out of the trade. I lost $50. Gesundheit, hate, it's a beautiful thing. If it goes to 50.5, I immediately take a profit, because trading with a profit, with a little money in the bank, is the greatest sense of confidence you can have. So let's say I bought 100 shares, I sell 50 shares, 50% of my trade, up $0.50. Okay, and I moved my stop order from 49.5 to 50, break even. So now I just made $50, and I now cannot lose money on the trade. That is the greatest way to learn and to trade, knowing that I just put a couple of dollars in the bank, and now I cannot lose money on the trade. Okay, what an amazing feeling. And then if it goes to 51, I sell 25% more of the trade, and I raise my stop order up to 51. So I'm locking in a 50 cent or $1 profit. And as the stock goes in my favor, I'm going to use a trailing stop order or a bracket order to get the most out of my winners and to lose the least out of my losers. That's the nature of this business. Then what I'm going to do is, if I'm up and I have reached my limit and I turn my machine off, if I'm up $1,000, okay, or I reach my limit, I turn the machine off and go home. What you never want to do is turn a winning day into a losing day. If you ask any retail trader, have you ever been up 1,000, you thought you had diamond hands, you start betting, trading irresponsibly, and by the end of the day you're down 4,000, you turned a winning day into it's the worst feeling in the world. You're kicking yourself in the head going, at noon I was up $1,000 and now I got to go to the ATM 4 times. How stupid is that?
And it's worse than losing money.
It's way worse than losing money. Yeah. So that's turning a winning trade into a losing trade, and that's turning a winning day into a losing day. Yeah. So basically, that's kind of and then let's say you get into a trade, you lose, you get stopped out, you lose $50. You get into another trade, you get stopped out, you lose $50. If you have 3 losing trades, you turn your machine off. Okay? Otherwise, the psychology of trading, it's called revenge trading. I got to get back what I lost. You start trading irresponsibly and you end up going home down not 150, which is what would have happened if you turned the machine off, but you're down $3,000 or $4,000. Okay? So never revenge trade when you'll come back from a bad day. You'll come back from a bad week, but you'll never come back from being up $500 and by the end of the day, you're down $8,000. So those are the 5 trading secrets. Now, if you look at somebody who's a trader who's unsuccessful, he does the exact opposite of that. He never uses a mental stop order. If you use a mental stop order, you're mental. First of all, he doesn't have a goal in mind, so he's just trading like rampantly. He's up 200, he's down 500, so there's no organization or strategy there, right? And he doesn't know about turning winning trades and winning days into losing days. And then when he starts losing money, he stays in, he goes all in, and he starts losing money more and more and more. The analogy I use is when there are 2 kinds of gamblers that go to Vegas. There's a guy who says he's got $1,000. He sits down at the blackjack table. He said, if I make $1,000, I'm going to turn it off. I'm going to go to Ruth's Chris, get a steak, take my family to see a show, and I'm going home. The other trader has no plan, has no strategy. He goes in there, he's up 1,000, he thinks, great, I got 2,000. He starts betting and betting and betting. By the end of the night, he's down $8,000. He's been to the ATM 5 friggin' times. He doesn't have enough money to pay his rent, and it's a losing situation. So there are strict rules. I'm happy to share them with you 1,000,000 times over, because those are like the 10 commandments of day trading. And if you can't follow some of your rules and some of mine, because you will lose, right? I hear people say, how you doing? Well, I'm batting 80%. Really? So you're up, you're profitable. Well, no, not really. So I said, well, how is that possible? Well, I had 4 winning trades. I made $100 each. So I was up 400. Then I had 1 loser and I lost $8,000. Well, that's not a sustainable trading strategy, right? To be betting that way or trading that way. So you got to follow the rules, learn the game, right? There are strict discipline and consistency are really the keys to the castle to be a successful retail trader.
That's incredible. So if you can review some of my rules.
And bring them on.
Because obviously these shouldn't conflict with yours, but maybe they'll add a little bit of...
Look, there's no ego in trading. If you have something that works for you, then we will adopt it. We will listen to it. There's nothing wrong with that. That's fine. I'm not the end all be all. We didn't invent this shit, right? So we got to take ego out of trading. If you find something that works for you, then I'm willing to listen to it.
I'm going to say this as respectfully as possible. We expected more arrogance when we walked in here. Everybody here is so humble. And so and I feel like markets really do that over time, where you kind of have a more realistic approach as opposed to just kind of feeling high and mighty, or am I reading that wrong?
You know what? Look, people think that everybody here is so like you have, what's your impression of Wall Street? It's like Jordan Belfort, right? The Wolf of Wall Street. He's an arrogant asshole. So if that's what you're the pair of glasses you're wearing when you think about Wall Street, then yeah, you think we're a bunch of arrogant assholes. That's not necessarily the case. Is everyone down here humble? No, probably not. Most people here are nice. You know, some people were arrogant and then they got humbled because they thought they knew it all. So look, everybody's on a journey. You just got to do the best you can.
That's incredible. Let's go.
Tell me your rules.
My number 1 rule is you either have a trading plan or you're a gambler. There really is no in between.
100%.
So
that's
there's
a
no
rule.
intuitive traders here, or no?
No, look, you know what? I'll go back to a great story. When I started working on Wall Street in 1985, I worked next to a guy who was Ivan Boesky. Ivan Boesky was the guy the original Wall Street movie was about. He claimed that he was having premonitions about trades. He was hearing them through his pillow.
But it was Levine. It
was insider trading. It was a guy Levine from Goldman Sachs who was calling him up on the phone and giving him the inside information. So intuitive trading. Look, some people are good traders. Some people have a feeling for the market. But look, you should never think, and that may help you curate your trading strategy, but there are still strict rules about successful trading.
Incredible. I tell folks to try and trade one system, ideally one instrument, and around the same sessions every day, just to get familiarity with the market pattern or the movement of that traditional instrument. Do you believe in that? Or, I mean, obviously you guys here trade
Well, you know what?
thousands of instruments, so.
We trade everything. We're firm believers in basically if you learn technical analysis and you have your charts set up and you don't fill your charts with a million different indices, a million different
indicators.
Indicators.
Yes.
right? You don't want your screen to look like air traffic control on 9/11. You want to keep it simple. We use the RSI, we use the EMA, exponential moving averages, and we use pivot points, which is just a formula.
Wow.
So we keep our then we use double top, double bottom. We use Fibonacci. But we try and keep it simple, right? At the end of the day, look.
I'm sorry, can I break that down real quick? You said pivot points.
Pivot
EMAs,
points, EMAs,
moving averages,
right? The 9,
and
the 15, the
Fibonacci's.
30, the 65, and the 200. We use RSI, Relative Strength Index, below 20 and above 80 are our indicators, okay? And we use double top, double bottom, and we use Fibonacci. Fibonacci is a retracement strategy, and was done by some famous Italian guy named Fibonacci. It's all good. You eat a cannoli, have some Fibonacci, it's fine. But look, at the end of the day, if you're familiar with a stock and the way it trades, that can be an advantage. So what you're saying is kind of right. If I'm good at trading SPYs, then trade the SPYs. But don't trade them without following the rules that you use, right? So familiarity with a index or a stock can be helpful, but at the end of the day, you can't really cherry pick when you're day trading.
Yes.
You need to get into every trade that sets up because it's a probability game. If you only trade, pick one here and one there and one there, at the end of the day, you're not. Look, if you trade every trade that sets up, you're going to win some, you're going to lose some. Chances are, if you follow the rules, you're going to win more than you're going to lose, and you should be profitable at the end of the day. So I kind of agree with you, and not all the way.
But if you try to pick and choose which trade is going to be the winner, typically you'll miss the good one and catch the losers or something?
Exactly.
Okay, incredible. So we mostly trade stock market indices, and I tell folks, try to only trade near the lows and the highs of the day, because typically that's where, if the market retraces back to another entry at the low of the day or the high, versus trying to chase it in the middle of the range once it's already left the station. Is there any validity to that or no?
You know what? Not necessarily. Look, if the lows of the day and the highs of the day coincide with a moving average, then it's a good strategy. Yes. But it doesn't always necessarily, because the low of the day sometimes, if that's where support is, we can break through that support. So what was the low of the day may not always stay the low of the day, if you know what I'm saying.
Yes.
So it's a sort of I don't like making these broad swath comments, right? If things set up, right? Every trade has criteria, right? A trend trade has criteria. It's a stock going up in one direction. It pulls back to the 9 and the 15 EMA. You buy some on the 9, some on the 15. You trade it, you take profits, use a scaling stop. If you're in a base trade, the stock's going flat for 30 minutes or an hour. You wait till a green bar or red bar is created, and then you jump in with a market order. If you're using a moving average trade, there's certain criteria. A far from moving average trade, certain criteria. Up 3 days in a row, RSI of 80 or 20, then you jump in. So each trade has very specific criteria that we use, right? Look, there are a million different ways to trade the market.
Of course.
Why do we use what we use? Because for us, it
works. Yes.
That's all.
That's incredible. All right, one last rule, and then I'm going to ask you one last question after we can wrap this up. One last rule is it's better to miss a trade than to chase a trade.
100%.
Very generic, very easy.
All day, all night, 100%. Look, you will often see, the wonderful thing about technical analysis is that the chart tells you where to buy and sell the stock. It's unbelievable. A stock can go down. Look, we saw it with GameStop. GameStop went from 2 to 20 to 483 and down to 151. When the stock was trading at 480, okay, I called David Green because I had an order to buy stock. I said, Dave, tell me where do I buy it? Because it's trading in 100-point moves. He said there is no support until $151. I said, you mean to tell me it's going to go 300 points before you think it's a reasonable buy? He said, the charts are telling me there is a 200-day moving average at 151. The stock came from 483 to 150 and 3/4.
Wow.
It went down 300 points and broke it by 25 cents and went up $31.
Wow.
That means to say that if everyone was trading, it was trading at 483 and it went down $100, and half of the world said, I got to buy some, it's down 100. They were wrong. They blew up their trading account. Down 200. I got to buy it. Someone paid 483. It's down $200. It can't go any lower. Boom, you blew up your trading account. So support and resistance, right? Moving averages, pivot points, RSI, oversold, overbought conditions. Those are the things that work. So that's kind of where I'll go with that.
Incredible. Ladies and gentlemen, I have a very special announcement. So today is that special announcement. Peter Tuchman will be the opening speaker for this FX Summit 2024 conference, the most anticipated conference in the world for traders. Peter, are you excited to come out to Dubai?
You know,
and share
look, I am
this
so
knowledge with us?
excited. If I can, I'm going to bring my man, my teacher, my mentor, my friend David Green with me. He is really one of the greatest teachers in the technical analysis space. And to have someone like that who actually, look, there are a lot of people out there who know technical analysis. Very few are good teachers at it. David's kind of like that guy in college. You didn't care what he was teaching. You just loved to listen to him because he had that amazing ability to convey information to somebody else. So that's super exciting. We're going to hopefully come. If not, I'll be there by myself telling stories about Wall Street, talking about my journey on Wall Street, the good times, the bad times, success, failure, trading, all that kind of stuff. I'm happy. Look, I feel it my responsibility, having been here for a long time and having seen the crash of 87, 2000, the Lehman Brothers crisis, the crash of COVID. I've seen it all. And we know that for you to get a better handle on the market and to learn how to trade it, you need to know what happened beforehand.
Yes.
And I can share that as my own personal experience, not reading it in a book, not hearing some guy. Look, you've got guys teaching day trading who have never done what I do, have never really day traded, right? So you've got to have your boots on the ground, your feet, in the fire to really be good at sharing your experience in this game, to be able to convey that kind of stuff. So
Amazing.
I'm honored to be there and be your speaker, man.
Your energy's off the charts. The charisma is infectious, and we look forward to
Pleasure,
seeing you in Dubai. Everybody, make sure to grab your tickets to come see me and Peter in Dubai, and hopefully David can make it out as well.
Yeah, we look forward to it.
We'll have a workshop as well, so make sure to check out.
We'll do Q&As, we'll do workshops, we'll be there
of it.
for a few
And we'll
days.
include all of his links in the description below if you guys are interested in learning how to day trade from somebody with credibility. We're going to include those links, and make sure to follow on socials. Take it easy. Happy and safe trading.
Woo!
Peace.
Giddy up, guys.
Thank you so much, Peter. I seriously, I appreciate this more than you know. This is like Willy Wonka's factory for me.
You're goddamn right.